We're seeing a 7.5% inflation number. We haven't seen that since almost the year I was born. Hey, Kevin Amos, Pine Financial Group. We work together so you succeed. Thank you so much for watching the video. If you stumbled on it or if you're a subscriber, we appreciate the audience. We would also ask, if you are not a subscriber, please hit like if you're on Facebook, hit subscribe if you're on YouTube. We really are trying to build a community here to help more real estate investors just like you. Today, I want to talk about something that is absolutely terrifying. I read an article this morning, and I'm going to share my screen here so we could talk about this article here. So this is a pretty staggering report with the jobs for January of 2022. It just basically says, and you can read the headline here, guys, surprising January jobs report shatters expectations. Just a tremendous amount of jobs were added into the market. Normally when you see, a decrease in unemployment or a high jobs report, you would see the stock market increase in value. What we are not seeing, though, is a stock market increasing in value. What we've recently seen is a plummet in the values of stock, and here is why. It's what we've been waiting for. We keep hearing, actually, and it's been here a little while, but we keep hearing, look, inflation's coming. We got to hedge against inflation. We got to figure out what to do with our money so it's not deteriorating through inflation. And you can see right here, folks, rapid inflation stokes unease from Wall Street to Washington. And this is really what's scary. If you look at this second paragraph, first sentence, we're seeing a 7.5% inflation number. We haven't seen that since almost the year I was born. I think it was the early 1980s when we saw inflation this high. I don't know if this is going to continue, if it's going to decrease, increase, who knows? But I do know it's 7.5 right now. And why I think this is so terrifying, if you're in the appropriate assets, you'll be okay. But if you are invested in money markets and CDs and things like that, your money is losing value much faster than you're making money on the interest. And I'm going to show you that. So for those of you that are planning on or saving for retirement or getting closer to retirement, check this out. I just threw together this spreadsheet here, and I just used the current inflation of 7.5%. That's what it is right now. And I want to start with $100. So I say, let's say if we could fill up our car for $100, one tank of gas. I'm just using that as an example. So if you could buy a tank of gas in January last month, then in February, that same tank of gas, assuming inflation stays where it's at, is 63 cents more expensive than it was 1 month ago. And staying consistent with the current inflation rate, if you look after 1 year, that same tank of gas now costs you $105.66. So what if you invest that $100 into a savings account? So I'm using a savings account rate of 0.25, and here's where I got that. I Googled highest savings accounts rates, and if you're willing to go out there and just move banks and jump banks looking for the absolute highest interest rates, you could probably get 0.45 to 0.5% in a money market account. But if you look at Wells Fargo, so let's say you're going to just stay consistent with your current bank. I do not bank at Wells Fargo, but I just use this as an example because it's a pretty large bank and a lot of people do bank there. So you can see savings rates right now, 0.01%. You've got a platinum, guys, platinum account, still 0.01, unless you have some type of extra relationship, then you could double that at 0.02%. CD rates, so if you're willing to lock your money up for a period of time, 3 months, 6 months, 1 year, the highest rates you're going to see 0.02%. So I'm basically saying that's a 0% return. If you're chasing returns, you might get a 0.5%. So I just use something in the middle for this example. So that's where I came up with that. If you put that $100 into that savings account last month, same as when you could have bought that tank of gas, you could see what the money would have increased in value, or that account would have increased in value over the year. And the formula is really simple. I just used the previous amount, $100 times 0.25% divided by 12, and then I added back in the $100 so you can see the current value, not just the interest that you earned. And so you just did that all the way down, $100.23. So this number here is the current value minus the tank of gas. At the end of the year, you would have lost buying power, lost actual money in the deterioration through inflation of $5.43. Now I just threw this up here. We do have many of you know, the mortgage fund, our public fund was approved. And that's a cool fund. We have audited financials and we do all of that. We loan that money out to real estate investors to do fix and flips and small real estate developments. That pays an 8% return. So if you invested in the Pine Fund, same $100, and you can see the math is identical, except I changed the rate to 8%. And you could see that your $100 at the end of the year would be $107.58. Probably should be 8, but I just did it month after month after month. It probably would be 8 if I added one more month. Anyway, that doesn't matter. That rounding does not matter. What we do see is an increase in buying power of $1.93, which is not huge. I get it. Okay. What this fund could do, though, is at the very least, keep up with inflation. So you're not losing money, buying power, deterioration of your money through inflation. You at least keep up with inflation. And the good thing about the Pine Fund is you are able to pull your money out at any time. You will not be locking it in for 3 months, 6 months, a year, or longer, trying to get a higher interest rate. Now I want to show you, if we're going to look over a longer horizon, say you are looking at doing a 20-year horizon for your retirement. So if we do January 2022 through January of 2042, same $100, that tank of gas is going to cost $424, assuming inflation stays where it's at today, which obviously isn't possible. I don't know how else to do that because I don't know if it's going up or down. So I'm just going to say that's the inflation because that's what it is today. Looking at the savings account at 0.25% interest, we lose buying power, $319. Stay pretty even, of course, with the Pine Fund. Now, what if we actually bump this up to what a more legitimate investment might look like? Let's say $100,000. So we do $100,000 investment. You can see what the numbers do. That $100,000, if we were buying tanks of gas, goes way up. We lose $319,000 in buying power by trying to save money in our bank account. That's why this is terrifying. It's absolutely destroying retirement. We have to do something to keep up with inflation. I think there's lots of opportunities, real estate, real assets, gold, silver, that type of thing. There's an argument for cryptocurrency, but if you want to at least keep up at the very minimum without locking your money up in something that is consistent, the Pine Fund at 8% at least it keeps up with inflation. Gosh, I hope this didn't freaking terrify you like it terrified me when I read that article. And I hope you do something to help hedge against this inflation because it's real, guys. It's real. If there's anything we can do to help you, please let us know. If you're interested in the Pine Fund, I'd love to send you out the prospectus. There's no commitment. You just read about it. We could jump on a phone call and talk about it. Happy to do it. You could check us out at pinefinancialgroup.com.